We're preparing to go live, so if you just wait. Okay, we are live.
Okay, is everybody ready to begin then? Mr. Lamoureux, you're muted, and Mr. This is Wellage, you're muted as well. So you should probably unmute yourself at this time. Okay, great, thank you. All right, well, so let's start this hearing. This is a hearing of the Town of Canmore Composite Assessment Review Board. Under complaint is a roll number 20159, located at 329170 Kananaskis Way. Under complaint is an assessment of $619,000. Is that correct?
Correct.
Okay, I'll start this hearing by introducing the panel. My name is Hee-Sun Kim. I'm a member of the Municipal Government Board, and I will be the presiding officer this morning. I'll start by introducing the members, and I'm presuming these hearings are being recorded. So we'll start with Mr. Hildebrand. Could you identify yourself?
Hi, good morning. My name is Dale Hildebrand.
And Ms. Williams?
Hi, Andrea Williams here.
Do any of the parties have any reason to object to the composition of this panel?
No, Madam Chair.
Mr. Lamoureux?
Nope.
Great. I will just briefly go over our procedures. We have in front of us 4 documents that were distributed beforehand. We have the complainant's disclosure in 2 parts, A and B. They consist of a 23-page document for A and a 245-page document for B. We will mark them together as Exhibit C1. Then we have a disclosure from the respondent that consists of 102 pages, and we will mark that as Exhibit R2. And then we have the complainant's rebuttal, which consists of 4 pages, and we will call that Exhibit C3. In terms of the proceedings, the way we do this is the complainant will make their evidentiary presentation first. Once that presentation is complete, the assessor and the other panel members may ask questions. Before I do that, I'm sorry. We should identify the parties for the record. So we'll start with the complainant. Mr. Lamoureux, could you identify yourself for the record?
Yeah, I'm Gary Lamoureux. I'm the owner of NGGC Holdings, Inc.
Thank you. And for the assessor for the Town of Canmore?
Good morning, everybody. My name is Lance Waylagi. I'm with Benchmark Assessment Consultants. I'm the appointed assessor for the Town of Canmore, and I will be the respondent for the town here today.
Thank you. So your last name is pronounced Waylagi?
Waylagi, yeah.
Waylagi. Okay, great. I'm sorry I mispronounced it last time.
Okay.
Okay. So after the complainant has answered all his questions, then we go to the assessor, and the assessor will make his presentation. Again, the complainant may ask questions and the panel may ask questions. Once all the evidence is in, then we go to summary statement and argument, and the assessor will go first, and then the complainant will get the last word. Do you have any questions on the procedures?
No, Madam Chair.
Okay, are there any preliminary matters before we begin?
None from the respondent.
Okay, Mr. Lamoureux, are you ready?
Yeah, I guess, I'm not familiar with this process whatsoever. Are we supposed to present our whole, everything that we've submitted, or have you guys reviewed all that, or?
We've reviewed it briefly, but normally in a hearing, you will present your evidence and you will you'll walk us through it and tell us what what you feel is important in terms of making a decision.
Okay. So am I supposed to start now? I'm not.
That's right. Yeah, you can make your presentation. We do have your documents, so if you'd like us to refer to a document, then you would say, for example, if you go to C1A page 5, then this is, the whatever my argument is, that kind of thing.
Okay, yeah, I don't really have a presentation or anything put together, so I guess my main complaint with the process that the units at the Blackstone have been assessed is our property is basically, I guess to start out with, is these properties are zoned as short-term rental properties. They're taxed at a rate over 2 times the rate of residential properties. The way I look at it from my perspective is that all these units are basically revenue properties and are made for investment purposes by people that own them. So the way that revenue is created is they are rented out, just like the Blackstone is basically a hotel. So the revenue that you get is basically fixed based on the amount of people that can sleep in the unit. So 1 bedroom, 2 bedroom, 3 bedroom, sort of thing. And when you buy these properties on the market in Canmore, the prices they're set is basically based on the revenue that you can get. So is it a 1 bedroom? Is it a 2 bedroom? Is it a 3 bedroom? And the values that I have seen following the market closely for many years is set on that number. So like a unit in the Blackstone, a 2-bedroom unit, it will sell for X, and the price varies maybe $10,000 when it's listed, because there's very little difference in the units. And like I said, it's an investment property. When you go and rent a hotel room, you don't look at the square footage. You can't charge 10% more if there's 10% more square footage in the unit. So anyway, I guess where I'm going with that is that the assessed value, the square footage factor, seems to be the highest factor that is put on the assessed value of the unit. So a unit with a lower square footage in the Blackstone, I believe I looked at one unit. One unit with 941 square feet, the assessed value, it's a 2-bedroom unit, 2-bathroom unit, same as our unit, is assessed at $519,000. So our unit is 1,105 square feet, and it's assessed at $619,000. So it's $100,000 difference on the assessment. So we're talking 150 square foot difference here. And the main difference in that, I don't even think it really matters, but just because of the location of our unit, where it is located, there's a stairwell. So in order to make the unit work, they added a hallway in our unit so you can enter the unit sort of, and it's useless space, but it's an extra hallway. So, and it's approximately 150 square feet as well. I don't think that really matters a whole lot here, but it's just a fact.
I'm sorry, are you making reference to page 12 of your materials?
Page 12 or page 20? I guess both 12 and 13.
Oh, both 12 and 13. Okay, but you're saying that that red part that you've outlined is what you're saying is extra space is not valuable?
No, it's not. It's right. It's because of the way the unit is placed, right? Like it's in the end corner. So and the dotted outline, the L-shaped next to our unit, like sort of above on the drawing, is that is the stairwell for the building. Like it goes, from the bottom floor to the top floor, sort of thing. So in order to get into the unit, there's a little hallway in ours, which is approximately 150 square feet. But again, my argument is not that the hallway is what's devaluing my unit. It's more or less that the value of the units are basically set by the amount of bedrooms that are in the unit, because that is directly related to the revenue that can be generated from the units. So I guess, yeah, so in short, my main argument is that I feel it's unfair that the assessment for my unit is $100,000 more than a unit, another 2-bedroom unit in the Blackstone, which, I can't generate, whatever that percentage, like 17% value. I can't generate 17% more revenue than the other 2-bedroom unit. It's just not feasible, right? So that's how I feel that the assessment's unfair, the way they're done for short-term rental properties, I guess, is the I guess that's my argument.
Thank you, Mr. Lamoureux. The second part of your submission, which appears to be the tax roll for the town of Canmore, what did you intend to highlight from there?
To be honest with you, I wasn't sure. I didn't really understand the process, and that was actually what I was submitting for the. So it just said I needed to. I thought I had to just enter any material that I used for reference for values as part of the process, sort of thing. So if I didn't submit that, then I didn't think I could use the numbers from it, I guess is why.
Oh, I see. Okay, so that's basically backup for your your little spreadsheet on page 13 of 23.
Yeah, for sure. Yeah.
Okay, and the page 13 of 23 is effectively your comparison of equity or whatever. Is that
correct?
Okay, all right.
Yeah,
okay,
and I guess one more thing too is I also looked at some other units in other short-term rental properties, and the assessed values and the market values just don't seem to line up either. Like it doesn't. There's some seem to be valued way higher in the market, but the assessed values were way lower than what we were valued at, and they have similar amenities and similar locations in town as well. So.
Okay, but you're basing your requested assessment on other units within your complex?
Yes.
Okay. Does that conclude your presentation, Mr. Lamoureux?
Yes.
Okay, Mr. Weliggy, do you have any questions for the complainant?
Yes, thank you, Madam Chair. Hi, Mr. Lamoureux. How are you?
Good. How are you?
Good. Nice to put a voice to our conversations. I think I understand your arguments in full, as we've had some exchange in the past. Just for clarification, so on your page 13, so your requested value of $540,000 essentially would come from the top of that chart. Is that correct?
Sorry, I just need to find. Well, the requested value I came up with was, it's just for market value listings. That seemed to be the close average was around 540.
Okay, I just wanted to clarify that with you. So it kind of came from roughly your interpretation of the sales there on the top of 13. Okay, thank you. No, that's all the questions I had for clarification. Thank you.
Thank you. Mr. Hildebrand, do you have any questions for the complainant?
Hello, Gary.
Hello.
Do you have your unit in the rental pool with Cleek, or do you self-manage it?
We self-manage it.
And do you think there's a significant difference in the revenue you receive from your unit because of that?
No, I've actually been considering putting it in the rental pool, and I've been speaking with a person that's on the in the rental pool, and the revenues are probably actually less in the last couple of years for us. So.
Okay, so if I understand your argument, you're basically saying that this unit is an investment property, and a discounted cash flow analysis is a more accurate way to value market price than on a dollar per square foot basis.
Yeah, I don't understand your statement about discounted cash flow. I just like what I'm saying is that the units are. What I'm saying is the units should be treated fairly on how they generate revenue, because that's how they're being zoned, right? Like it's not zoned as residential, like, or the tax rate would be more like a residential. So I think if they're being taxed differently, then they should be assessed differently, because the square footage is not the biggest metric between what revenue you can generate from the unit, right?
Right. So I think what I'm hearing you say is that the market value is some multiple of the revenue that the units can generate, and whether it's 900 square feet or 1,000 square feet, it's going to generate the same revenue.
Exactly.
Okay. Thanks so much.
No problem.
Ms. Williams, do you have any questions for the complainant?
My only question really was, or just the Blackstone comparison chart, is that is your main evidence to support your assessed value? Because there was some mention of another complex, so just wondering, were you using both, or just the units within your own complex to generate your view of the value?
I was mainly using the Blackstone values, yes.
Okay. Okay, that's all I have. Thank you.
Thank you, Ms. Williams. I have a few questions. So I'm looking at your page 13, which appears to be the bulk of your evidence. And I was just wondering, I see that they say that they have 2 bedrooms and 2 bathrooms. There's a bit of a difference in, it looks like 3 out of the 5 have 994 square feet, and 1 has 941 square feet. Can you point them out on your page 12 so that we can see why? Presumably the ones that are 994 square feet have the same layout. Is that right?
The ones that have 994?
Yeah, like there's 3 of them that have 994 square feet on your chart.
Yeah, it's just completely relational to where they're laid out in the building.
Okay, so if you look at your page 12, it looks like, for example, unit 85, 86, 87, and 92 are pretty similar to each other.
Yes.
Whereas like unit 90 is different, but it seems like it's quite a bit bigger.
I don't know if it's actually bigger, or if it's just a different shape, right?
Okay. All right. But when you say that you can't get any more revenue because of your square footage, do you have any evidence of that? Like, do you have whatever the rates are because this is a hotel condo, right? It's rented out.
Yeah, like if you go rent a room at the Blackstone, like you call them up or go to the website, it's you don't pay a different rate, right?
Okay, so they don't have different rates for different.
They have different rates based on the bedrooms. So like a 1-bedroom suite, and then a 2-bedroom, and then I think there's 3 bedrooms in the penthouse, I believe.
Okay. No, but you know, when you go to a hotel, like quite often there'll be other differences, like if it has a city view versus a mountain view or whatever, you know, that kind of stuff. Is there any?
There's nothing like that there, no. I know what you mean, like, yeah, like if you go to Mexico, it's like beach view or pool
Yeah.
view sort of thing, yeah. Yeah.
There's nothing like that here.
There isn't, no.
So you're saying that it's basically if you want a 2-bedroom, 2-bath, then it's this price. If it's a 2-bedroom, 1-bath, it's this price. If it's a 3-bedroom, okay, I understand what you're saying. Okay, and then when you go to your page 12, that dotted line right next to your unit, is that the stairwell that you're referring to?
Yeah, the stairwell is within the dotted line, and then where my red line is there, like there's a spot of useless space there in the one box, and then the red line is where the hallway is that is there, just specifically because the kitchen is basically on the left of that red line I drew. I guess I should have drew a better drawing, but
Okay.
the only reason the extra space is there is just so that because of the way
To
the
get
unit's
around
laid
the
out, I guess.
stairwell, right?
Yeah.
Okay, so they could just as easily have put that space into common area and had your door
Mm-hmm.
on the left-hand side, like where it says 3.41. Is that sort of where you enter your unit?
No, the where we enter is next to like unit 90.
Yeah, no,
So-
that's obviously where the door
okay.
is. But what I'm
Oh,
saying
okay.
is the usable space.
Oh, yes. Yes,
The
where you
usable
actually
space
go into
of
the
your
usable
unit
space. Correct.
is
Yep.
at that end. So
Correct,
what you shaded in yellow is sort of the usable space of that unit. You're saying
That's correct, yeah.
okay. All right. I don't have any other questions. Mr. Welligy, do you have any questions arising?
Yes, Madam Chair. So just to confirm with the complainant, so you've made the assertion that the units should be based on an income approach rather than, say, a sales comparison approach, but you haven't included any rental information within the evidence package. Is that correct?
No, I haven't, no.
That's all, Madam Chair.
Okay. In that case, are you ready for the assessor's presentation, or did you want a minute to take a look, Mr. Welligy?
Oh, I'm ready to present.
Okay. In that case, we'll move to Exhibit R2.
Thank you, Madam Chair, members of the board. I just want to introduce myself. Again, my name is Lance Welligy. I'm an accredited municipal assessor of Alberta. That's no knock to the pronunciation of my last name either. I do this for everyone, but I've been an assessor for roughly 16 years, and I've prepared assessments for various municipalities, including City of Lethbridge, County of 40 Mile, Foremost, Bow Island, Redcliffe, Nanton, Town of Canmore. We actually just recently took over the assessment services for the Town of Canmore for the 2020 tax year. I am going to jump a little bit between some pages in my document. So I will be referring to page numbers on the bottom right, as well as paragraph numbers, which are in the parentheses on each page. So with that said, Madam Chair, I'd like to move to my page 3.1. Page 5, section 3.1. So the issue I believe here before the board is very straightforward. It's a market value issue. Ultimately, it's the question before the board is the assessed value at $619,000 reasonable, or is an alternative value as proposed by the complainants more reasonable? So it's a fairly straightforward issue for the board here today, and I'll try to respond to some of the issues specifically that the complainant has brought forth in my response package. Just to give you a bit of an overview of my presentation before I get started, I'd like to start a little bit into the background of lodging condo assessments, and then move into my evidence and analysis, and conclude just at the end with some small argument. So we'll be presenting to the board here today in 3 specific sections. So we'll take a look at the background, the evidence and analysis, and conclude with a little bit of argument at the end. So if you could turn to my page 6. So lodging condominiums in the town of Canmore are prepared using the direct sales comparison approach. So because these condo units typically sell in high inventory, so we do have a lot of sales within our analysis period, we typically favor a direct sales comparison approach versus, say, an income approach. And the reason, again, is just because we have a large number of transfers of these units over the analysis period. For all lodging condominiums, we take 3 years of sales prior to the valuation date. So valuation date for the current assessment being July 1st, 2019. So we take 3 years of sales prior to that. So July 1st, 2016 to June 30th of 2019 for valuation as of July 1st. So this sales period is a 3-year period. It's required for the assessor to use 3 years for all condominium properties. So the assessor would value using 3 years of sale. We'd submit those 3 years of sales to the municipal affairs, and of course that's what generates our assessment level for our ratio stats to essentially meet the quality standards as set out in matters relating to assessment and taxation. Because you're dealing with 3 years of sales and market conditions can change over time, whether that's up or whether that's down, what the assessor is required to do over a 3-year period is apply adjustments to each sale for market conditions. We also call those time adjustments. So if a market is increasing over the 3-year period and you have a sale that sells at the beginning of that period, say July 2016, if you have an increasing market, that same property would arguably sell for higher at the end of that increasing time period. So therefore, the assessor, before he goes through his preparation of assessments, has to adjust all those sales forward to the valuation date of July 1st. So on page 7, you'll see essentially the analysis that was completed for the lodging condominiums. There was 984 lodging condos within that time period throughout the town of Canmore. So as you can see, there was a significant increase in market values over that time period. And the results is shown on page 8. So these are the time adjustment factors that have been applied to all sales over this analysis period. This is important to consider because when I go through the evidence and analysis, I'm going to be introducing sales, and there's going to be some sales that I introduce that are earlier in that 3-year period and are going to need to be adjusted to the valuation date before we go through and do our analysis. So moving into my page 9, so this is the evidence and analysis section of my presentation. So I've already touched a little bit on the sales comparison approach. Again, for condominiums, specifically lodging condominiums, we have a significant number of property sales within the analysis period. So we tend to favor a sales to comparison approach versus, say, an income approach for these specific units. Because the units are so homogeneous, when you go through the direct sales comparison approach, typically what you do is you would enter sales, you would adjust for any significant difference to those sales, leading the board to an indicated value range of the subject property. But with lodging condominiums, because they're fairly homogeneous, fairly similar properties, they do have differences, but they're fairly similar. Typically, what we would do is just do a straight price per square foot analysis, because we've stratified these properties and they're very similar in location, age, quality, amenities, any type of reserve funds, and parking, etc. Basically, we can look at the sale prices as adjusted on a price per square foot basis, which is essentially how the valuation model is derived, to establish whether the assessed value is reasonable. So in doing that, I'm going to introduce a few sales that occurred in the subject complex over the analysis period. So turning to my page 10, I'm on paragraph 5.5. So in the complainant's disclosure, there was an email exchange going back and forth, and the complainant had asked, well, what sales were used in the valuation year. And I had disclosed, and he included that email in his disclosure, but you'll see that there was a significant number of property sales that happened within the complex of the lodging condominiums. I have selected 6 of those sales, and the reasoning behind the selection of these 6 sales is because the assessor has to prepare assessments using mass appraisal, and he has to prepare assessments using typical market conditions for similar properties. What I wanted to do is grab a chunk of sales from the sales data, but I wanted to grab the sales that are best reflective of the valuation model. So they're in that middle range. So they're not a selection of sales that would indicate an outlier on the high side or an outlier on the low side. They're essentially sales that reflect what would be typical market conditions for similar properties. So on paragraph 5.5, what I'm doing here is I'm introducing the 6 sales, the sales date, the sale prices, and then I'm applying the time adjustment factor that we've laid out under section 4.5 in the previous portion of my presentation. So here you'll just see essentially the sale price times by the time adjustment factor gives us the time adjusted sale price. So all of these sale prices are as if all of these sales sold on the valuation date of July 1st, 2019. If we scroll down the page on page 10, what you're going to see in the next 2 pages is essentially the condominium layouts. And I'm just identifying where each of the sales are located within the subject's complex. So on the bottom of page 10, you'll see the 3rd floor of the complex. Comparables number 2, 3, and 4 are all located. I think one thing to note, Madam Chair and members of the board, is what you had pointed out earlier through questioning, is that, you know, even though sizes are similar, even though bedroom counts and bathroom counts might be similar or the same in some circumstances, you are looking at different units that are rather unique, considering layouts. You know, they are similar, but it's important to note that they're not the same. Going to page 11, top of page 11, you'll see comparable number 5, comparable number 6, and then the subject property on the top of the page, also on the 3rd floor. You'll notice that comparables 2, 3, 4, 5, and 6 are all located on the same floor, the same 3rd floor as the subject. And then comparable number 1 is actually located on the 2nd floor, and that's shown on the bottom of page 11. So you'll notice that it's the exact same unit as the subject property. The layout's the same. It's just 1 floor lower. Okay. Moving on to page 12, paragraph 5.6. So now that we've introduced these 6 sales, yes, we've had some discussion around the direct sales comparison approach that we apply and have developed the valuation model around. It is primarily size-based. So if you have a unit that is smaller, all other things being equal, it's going to be assessed lower. And if you have a unit that's bigger, it's going to be assessed for more. So analyzing these sales on a price per square foot, in my opinion, is appropriate, given the key factor in the valuation model. So here on the top of page 12, under paragraph 5.6, what we have is the introduction of these 6 sales. We've broken the sale prices, the adjusted, time adjusted sale prices down on a price per square foot. And you'll notice out of the 6 sales, the average and median price per square foot, time adjusted price per square foot, is $573 a square foot and $581 per square foot, respectively. When we compare that to the subject's assessed value per square foot at $560, these 6 sales, which demonstrate the typical sales within the complex. So again, they would reflect values in the middle range. These sales would essentially support that a price per square foot, similar units over the analysis period were selling for slightly higher, but certainly within a reasonable range of the subject's assessment at $560 per square foot. Under my section 5.7, this is just a simple equity analysis. So what I've done here, Madam Chair, members of the board, is I've taken all of the units on the third floor, and I've broken down the assessments per square foot for all of the units. And you do have some varying sizes throughout the units. It is important to know that the subject's assessment is the largest unit on the floor, and therefore it's gonna produce the highest assessed value on the floor. But overall, if you scroll down to page 13, the average and median assessed values of all of the units on the third floor, again, average 562, median 562, whereas the subject's assessed at 560. So under 5.6 and 5.7, essentially what we have in summary is 6 sales supporting the value of the subject property at $560 per square foot, as the sale prices per square foot come in slightly higher. And on section 5.7, in the equity analysis, ultimately what you're seeing there is that similar units on the subject's exact floor also come in very close. So similar properties are going to have similar assessment. What I believe this demonstrates to the board is that we do have fairness and equity with the subject's assessment. Lastly, Madam Chair, I have submitted a lot of information on the argument side of things. Really, the biggest portion of my argument section that applies here today is under section 6.7. And so that's on page 19. So if you could skip ahead to page 19. This particular section is a direct response to some of the information that has been submitted in the complainant's disclosure. So the complainant had submitted some listing information, a few sales that actually happened after the valuation date. So valuation date being July 1st, 2019. Essentially, Madam Chair, members of the board, there's been a recent court decision in 2017 from the Court of Queen's Bench. Basically, the judge in that decision had said any sales occurring after the valuation date, any information after the valuation date is post facto and is not relevant in an assessment complaint hearing. Basically saying that the assessor prepares assessments based on a data set and a valuation date, and everything happening after that valuation date is not relevant in an assessment complaint. And boards have generally accepted that, and I have a decision out of the city of Edmonton there below that in 2019, which ultimately echoes the same thing from the Court of Queen's Bench, in that a sale was introduced as evidence, it was after the valuation date, and the board there said essentially relevant data does not exist after the valuation date, and the board was unable to put any weight on that. So just a key piece to keep in mind that the assessment is prepared based on a 3-year data set. This 3-year data set is not unique to the town of Canmore. Actually, all municipalities in Alberta for condominium properties are required to submit to municipal affairs for audit and, of course, the calculation of assessment levels. 3 years of sales data prior to the valuation date. So it's not specific to benchmark assessments in the town of Canmore. This is something that province-wide is done equitably and the same. And the reason is because it's all done the same when submitting to municipal affairs to, of course, calculate the assessment levels for the calculation of the equalized assessment for the remittance of education tax. So, Madam Chair, members of the board, thank you for your time. I will open the floor to questions.
Thank you, Mr. Whaley. Mr. Lamoureux, do you have any questions for the assessor?
I guess so. Like for questions, like is this the time I would say, like if I don't agree with what's like?
No, you would do
or
that
is that
during
later?
your summary statement and argument. This is where you have questions. For example, where you'd say, what does this mean, or what does that mean, or that kind of thing. Like something that provides more information.
Okay. I guess also I just wanted to clarify something that Lance said at the beginning there. I'm not just solely asking for revenue-based assessment. My main argument was that square footage should not be the main factor based on the assessed value of the properties. That's so. I'm just saying.
That's something you can do in your summary
Okay.
statement and argument,
Sure.
Mr. Lamoureux.
I guess just like in section 5.6 regarding your time adjusted factor, like you're using the data to support the the $560 per square foot value of the assessment, but your time adjusted factor, like the numbers, I guess. The sales numbers, they just don't match up. The $560 per square foot, they just don't line up with the market. So like how do you justify how you calculate the time adjusted factor?
Oh, sure. So to sort of elaborate on what I was saying towards the end of my presentation. So the assessor, when submitting his assessments for, of course, the calculation of assessment levels to municipal affairs, one of the things that the auditor would look at is what we call the time adjustment. So it's in assessment, how the assessor is typically audited by the auditor is using the sale to assessment ratio analysis. So essentially what the assessor does prior to the start of the preparation of assessments is he would take the sales that occur within the valuation period, so July 1st, 2016 to June 30th, 2019. And he would look at or compare or make a ratio of the sale price to the previous year's assessment. And he would trend those ratios over time. And the reason why you do that is it properly extracts time as a factor within the analysis. So when you do that, if it's indicating an increase in the market, you'll see the ratios increase. If it indicates a decrease in the market, the ratios will decrease. So out of the 984 sales that were submitted for and audited by the auditor for time, you'll see the result of that on my page 7. So over that 3-year period, you'll see that the market with respect to lodging condominiums has increased significantly over that 3-year period. So this analysis is essentially where those factors were developed and then applied consistently throughout the portfolio.
Okay. I don't have any other questions.
Okay, thank you, Mr. Lamoureux. Ms. Williams, do you have any questions for the assessor?
I do have a couple. First, just a clarifying question. You're using the phrase lodging condominiums. I just wondered if you could just confirm exactly what you mean by that.
It's actually what we call an actual use code. So it's a common term within I suppose the assessment community. How we report these units to municipal affairs is lodging with the secondary use of condominium.
Okay.
Visitor accommodation is something I think more locals would be used to a term, but they're basically the same. Yeah.
Okay. So my other question relates to your table in 5.6 of your presentation. And if I look at that, the most. You have in there the roll number 20124, which is basically the same unit that on the lower level. I mean, it obviously has a lower square footage than the other comparable units that you've selected. And I was wondering if you could talk about how much weight you gave to that compared to the other units, which, you know, for example, the next unit down is 854 square feet, which is quite a difference compared to the subject unit we're discussing here.
Sure. So with respect to mass appraisals, so as I mentioned, when we take a look at all of the units in the complex, they're certainly different in some respects, but we would consider them similar, and therefore the assessor would group these units together, and then of course use the common data within those stratifications to build a valuation model for all of the units. So essentially what I'm trying to say is that the assessor would not place additional weighting on, say, one of the indicators. You know, when he's applying mass appraisal, he's building a value model to reflect the typical market conditions, and that's for all properties or all units within that stratification. So to answer your question, I wouldn't have put any additional weight per se on any one indicator within that mass appraisal analysis.
Okay, thank you. That's all I had.
Thank you. Mr. Hildebrand, do you have any questions for the assessor?
Hi, Lance. I have a few questions. Maybe we could start on your 5.5 and your sales comparables. So just to clarify, you know, you've got 6 listed here. I assume they're numbered 1 to 6 in the table, and that's referring to your comparables below?
Yes, that's correct.
Okay. And are all 6 of these 2-bedroom units?
Well, it's again, the key factor that we use to develop the values is based on size. So it is one of the variables that we currently do not track or use in our valuation models. So I don't have that information on me.
Okay, so if we go down to 5.6, it could very well be that these units that are 700 and 800 square feet could be 1-bedroom, and the 900 plus could be 2-bedroom units. You don't know.
I think, yeah, it could be reasonable to assume that the smaller, significantly smaller units would be 1-bedroom. Yeah. Okay,
and if we go back to 5.5, would you agree that, you know, the further out you go with your time adjustment factor, the less accurate it would be? So, you know, a sale that happened like number 2 there in June of 19 with a small time adjustment factor of, you know, 1 to 2% versus comparable number 1 with a 60% adjustment factor, that there's the accuracy of number 1's probably less. That'd be fair to say?
Yeah, that's reasonable. Yep.
And do you know the zoning of these units? Like Canmore has two zonings for these type of units. One's tourist and one's vacation. Are these all tourist?
They're not tourist homes. I believe they are all visitor accommodations. The zoning is BVT-G.
Okay, so that's what we call vacation?
Yeah.
Okay, and if we just pop up to the page 2 of your presentation, you got a really nice picture there, Blackstone. Page 3, sorry.
Yep.
The aerial shot. Is everybody there?
Mm-hmm. Yep.
Yep.
So the units that are on this Kananaskis Way, you know, they face south, they have views to the south. and units that are on the north side, face the Trans-Canada Highway. So do you think there's a material market value difference between, those units that are on the front of the building versus the rear of the building?
We have analyzed or undertaken analysis like that in other complexes where we would apply an adjustment. We didn't see it as being significant, so something like that typically wouldn't make it into the valuation model. Not to say that there isn't value added for the difference there, just saying that something like that wasn't significant enough for us to incorporate into the valuation model. Currently, the only adjustments outside of the valuation model that we apply is a per floor, and again, very, very small, 1% on the second floor, 3% third, and 5% on the fourth.
Okay, so when we get to 5.7, the dollars per square foot are, for all intents and purposes, the same, within a very small band. But that just simply reflects that that's how you've evaluated them, or the mass appraisal system evaluates them. It says, yeah, these units are worth about $5.60 a square foot, and multiply it by the registered area, and that's your assessment, correct?
That's correct. Yeah.
Okay. Thank you, Madam Chair. Those were my questions.
Sorry, there will be that 3% because they're on the third floor.
Sure.
And that-
Yeah.
Thank you. I have a few questions, Mr. Whaley. The references that you made to the court decisions about post facto sales, was that intended to cast doubt on the complainant's first two sales that happened in August and July of 2019?
Yeah. So if we go back to the complainant's document, so page 13, you will see there that you have the top two sales that were essentially post facto, July 15th, and then August 15th. So yes, just basically saying that there are some sales, not only in the top portion there, but also as you scroll down the page, you'll see that the complainant had included some current listings, which were in 2020, June 30th, 2020. So again, it doesn't sound like the complainant put too much weight on the listings at the bottom of the page. It sounded to me like he primarily derived his value conclusion off of the top of the page. But I thought it was important to just point out that there was some information that was after the valuation date. Court decisions have essentially said anything after that valuation date is not relevant information in an assessment complaint.
But I don't think those court decisions were referring to sales in July and August. I think they were referring to sales much later than that, where you couldn't possibly have had them in time to determine, to have it included in your analysis. Generally, what time of year do you generally do your analysis? Isn't it usually in December-ish like everyone else, or is it earlier than that?
That's correct. Yep.
Okay. All right. So the other question I had for you was when you talked about your time adjustment factor, so you're saying you do it based on the ASR and not on the paired sales analysis that other municipalities use?
The inverse. So it's the SAR method. So sales to assessment ratio.
Sales. Okay. So just to be clear on how you do that. So if you have sales from 2017, you compare it to the assessment in the subject year to determine what the factor should be, what the time adjustment should be?
That's right, the previous year's assessment. Yep.
Okay. All right. And just to follow up on a question that that Ms. Williams had asked, because I was intending to ask the same question. If you look on your page 12, and just to, based on what the complainant has said and not what you said the issue is, it seems to me the issue is more equity with similar properties that have less square footage. I think that's basically what the complainant is arguing. He's saying he's got about 100 square feet of useless space that is adding $56,000 to his assessment or whatever that isn't of any value. So if you look at it from that perspective, do you think it's significant that, for example, the first one, the sale price was the lowest of any of your items? So in other words, the market doesn't give any value to that extra 100 square feet either?
Well, on a price per square foot, it'd be a little bit less. I think the only difference between comparable number one and the subject property is really the floor. So if you consider that we would apply an adjustment per floor on an increasing scale as the floor goes up, one could assume that if this unit had sold on the third floor, the price per square foot would be slightly higher. To me, it's still within a reasonable range of the subject property. So I still think that it would support the subject assessment, even if that was the only indicator that you're looking at.
Okay. Yeah, because it seems to me like the smaller units, like the second one on your list, it actually sold for closer to 600 per square foot. So I'm just wondering whether the flat per square, assuming that they're both 2-bedroom, 2-bath, but if they're not, then obviously it doesn't matter. But I'm just wondering whether segregating it just on a per square foot basis is maybe creating some inequities with properties that are not typical. And obviously the corner properties that are tucked behind a stairwell, I'd say is not typical if you look at your layouts on page 11 and 10 and 11. There's a whole bunch that are typical, and then there's ones that are in the corners that have very unusual layouts that are not rectangular, that are kind of joggy and stuff like that. I'm just wondering whether you would consider that in your analysis.
I haven't. So I haven't applied any sort of negative adjustment for, say, the unit layout in that particular instance. Again, I think if you still want to see what the exact unit with respect to layout and design, if you do want to focus on that comparable one, yes, the time adjustment price per square foot was a little lower. But again, it was on the second floor versus the third floor. Arguably, if it was on the third floor, it'd be a little bit higher. To me, would that still show that the assessed value is reasonable? I think so.
Okay. I have no other questions. Mr. Lamoureux, do you have any questions arising?
I guess I do have another point of contention with the percentage based on the floor. Again, rental rates are not dictated by what floor they're on, right? And the revenue you generate has nothing to do with the floor. It's just not a condo you live in. It's a rental condo. So all of Lance's numbers and adjustment factors are all very impressive, and I'm sure they apply.
Mr. Lamoureux, that's
perfectly.
not a question. You can save that for your summary statement and argument. Yeah.
All right.
Do you have any questions for Mr. Waylagi?
No, I guess not.
Okay. Now, did you want to highlight your rebuttal submission, Mr. Lamoureux?
What do you mean?
Well, you did your initial presentation based on your initial evidence package, but you also submitted a rebuttal package.
Yes.
So at this point, you can highlight your rebuttal package if you choose to.
It doesn't really have any other added value other than what I've already talked about, I guess. So there's not really
Okay, so this was your backup for when you said that
Yeah.
some places are being under assessed relative to what they sold
Mhm.
for and other
Mhm.
places. Okay, so that's just your backup for the statement that you made in your initial submission.
Yes.
Okay. And Mr. Waylagi, did you have any questions on that, or did you want to?
No, Madam Chair. No
Okay.
question on the rebuttal.
All right. Mr. Hildebrand, did you have any questions on the rebuttal submission?
No, thank you, Madam Chair.
Okay, Ms. Williams?
No, I did not. Thank you.
Okay. All right. And I didn't have any questions on it either. So at this point, we are going into summary statement and argument with the assessor going first and the complainant getting the last word. Did you want to go directly into it, Mr. Waylagi, or did you want a minute to compose what you want to say?
No, that's fine. I think I'll start right in if that's all right with
Okay,
you.
sure.
I did want to expand a little bit on the valuation model that Benchmark has prepared for the complex. One of the things that, looking back, I wish I had put in here, but certainly the board can go back and easily calculate is the median assessment to sales ratio of the group and the coefficient of dispersion of the group. And what that ultimately shows, Madam Chair and members of the board, is how accurate the assessment model is. And so if we take a look at the median assessment to sales ratio of the group being within 0.95, and I believe it's between 0.95 and 0.96, if my memory serves me correctly. And the coefficient certainly, I think, is in single digits. And it can easily be calculated, if you're curious, in the complainant's evidence submission on his page 7, that would be C1 on page 7. You'll see that I had disclosed all of the sales in the complex, their time adjusted sale prices, and their assessments. So if you really wanted to know the accuracy of the assessment model, the evidence is already in the disclosure. One could just simply go and calculate all of the assessment to sales ratio and calculate the median, as well as the coefficient of dispersion for the group. And I think what you'd find, Madam Chair, is that using square footage as the key factor, it still does produce a very accurate assessment model overall. That's not to say that somebody else couldn't create an assessment model based on room count or other factors that have been proposed here today, and have an equally good assessment model. But I think there's two viewpoints here, and I'm not confident one's right or one's wrong. It's just doing something maybe a little bit different in that one's primarily driven by square footage and one might be driven by say rental rates or the income approach or bedroom counts or otherwise. But if you do have, if you are curious, the information is there on the complainant's page 7. If you do want to calculate the median assessment to sales ratio and the coefficient of dispersion, that will show you the accuracy of the valuation model. I'm confident the numbers will come in very close to what I referenced. Overall, I think some of the key points that I would have the board focus in on is my page 12. Again, when we take a look at section 5.6, 5.7, here you're going to see sales of similar properties reflecting the typical market conditions for the subject property. When we take a look at the grouping, the price per square foot certainly supports the assessed value at $560 per square foot. The assessments of similar properties on the third floor certainly support the assessed value per square foot at $560. Even through questioning, if the board feels that comparable number 1 is still the strongest comparable indicator, being the exact unit layout as the subject property, just one floor below, what I would caution the board, or maybe just maybe put out there for the board's consideration, is that that's on the second floor versus the third floor. Typically, in this particular complex, the higher you go, the slightly higher the market value would be. So even considering comparable number 1, if the board wants to place the most weight on that being the most comparable indicator, in my opinion, it still supports it still supports the market value or the assessed value of the subject property being within a reasonable range of market value. With that, Madam Chair, members of the board, thank you very much for your time and consideration. Stay safe.
Thank you. Mr. Lamoureux, are you ready for your summary statement and arguments? So this is the stage at which you say all the things that you were going to say when you were supposed to be questioning the assessor. So your argument as to why you feel.
Yeah. Sure. I guess within that, I came up with a question, but I don't know if you can answer it now or if it's too late or not. But the question I had was the sale price that I paid in, I believe it was 2017, was $400,000. If he used his time-adjusted factor, what would be the current market value now, based on his time-adjusted factor?
Mr. Waylagi, did the purchase price go outside the 3-year analysis period?
No, the subject property did sell in the analysis period. It should be in the table here.
Like in 5.5 of your?
It'll actually be on page 7 of your disclosure.
Oh, page 7 of the tax roll, you mean? Or because
no, page 7.
There was nothing on page 7 of the disclosure that I could see.
No, on mine it was like when I bought it, it was $400,000 is what we paid. So I'm just wondering if, like in your section 5.5, if you use your time adjusted factor, like there's a similar one in 2017 at 1.2348.
Yeah, so on page 9, sorry, page 9 of the complaint.
Okay.
Yeah. My apologies. So yeah, on page 9, you'll see that the subject sale is included in the 3-year analysis period. And so it's about middle of the data set.
Okay, I see it. 420,000.
Yeah, and I did question you on that because that includes GST, but the price should not include GST on that.
Yeah.
So that's an error.
So
Okay.
based on the purchase price, the time adjusted sale price is 534,800. Is that what?
That's what I had disclosed. Yes. Yeah.
So then your assessment is 619 and the time adjusted is 534. Like so.
So again, when and that's why I was trying to emphasize to the board when we prepare assessments, we have to legislatively prepare it using mass appraisal, right? So we're looking at stratifying similar property using all of the sales data within that stratification and building an assessment model that reflects typical market conditions. So in doing that, when you apply the valuation model back to that inventory, essentially what you're going to have is you're going to have half of the properties above the assessment and half of the properties where the sale was below the assessment. Because the intent of the assessor is to create a valuation model that represents typical. So that's why when I introduced those 6 sales, the reason why I picked those 6 sales is because I want to show the board or demonstrate to the board what the typical sales were selling for within that analysis period.
Actually, sorry to do this, Mr. Waylagi. This complainant's information on page 9. How did you decide? Because there's a lot of sales within the relevant period in the subject building, and I'm just wondering, how did you determine which sales you were going to use for your 6 comparables in your R2?
Right. So when we take a look at all of the data set here, and if we were to create the assessment to sales ratio for each of these indicators, you're going to have sales that have assessment to sales ratios at 0.8, 1.2. There's going to be a range, right? There's going to be indicators which suggest the assessment's too high and the assessment's too low. But what I wanted to select the comparables is to reflect the middle of that range. So when you take a look at the comparables in 5.6, you can go to that chart, and I believe I included the assessments in. Oh yes, they're under 5.7, or further down in my addenda, or even on page 9 of the complainant's disclosure, when you look at the assessment to sales ratio, you'll find that it's going to be pretty close to 1, right? So I'm looking at trying to show or demonstrate to the board that these sales represent what's typical in the complex.
Okay, sorry to interrupt, Mr. Lamoureux. That answered
Oh, no,
your
that's
question?
fine.
Yeah.
I guess just my point is that, you know, your time adjustment factor seems to be pretty good, because if I was to list my property today, yeah, like I could probably list it for, you know, $550 or something, right? So I think that like it's close, but the assessment just seems out to lunch. So I guess that's all I have to say about that. And as far as closing arguments, I guess I'm just looking for the board to look at the large amount of factor that's put on the square footage for the units and the type of units, the way they're zoned, and I'm just looking for a little fairness in the appraisal price, like what it's been appraised at, and the tax that I pay it, because I just don't feel like the tax burden versus the unit is putting on the town of Canmore versus the so much higher appraisal versus similar properties in the unit. It just doesn't seem fair. So that's all I'm asking for is a fair view on it. So that's all I have, I guess.
Thank you, Mr. Lamoureux. It appears that all the information is in. Are both parties satisfied that they've presented everything they need to present in order for us to make our decision?
Yes, Madam Chair.
Yes.
Thank you.
Thank you.
Okay, in that case, this hearing is concluded for today, and the decision will come to you within the statutory time period. Thank you very much for your presentations.
Okay, thank you.
All right. Thank you very much. So we have